Hello! Today is Wednesday, April 7th, 2021, and I'm in a pretty good mood. Everything is looking up and positive and happy. Behind me, you can see the Lake District, which is where I went hiking last week. It's my Easter break, and this was one of my main activities. Really nice, stunning landscapes, fantastic weather. So lots of nice little English villages and lakes, even a Roman fort. It was just really beautiful, very relaxing. I really enjoyed it. And yeah, we are reopening. So it's good news and optimism all over the place. The shops are going to reopen on Monday. I might finally get rid of my Corona haircut. But the best news is probably that I managed to save £2,000 this month for investing. Well, I didn't really save it. I have a Swiss bank account because I lived in Switzerland before I came here, and I now need to close it down because you can't have a Swiss bank account if you're not a resident there. But I filled out my taxes too. I'm expecting a nice tax refund in Switzerland, and I'm going to invest that into the stock market too. So it's not really all savings from my UK salary, but from previous savings. Yeah, but it's a lot of money for me. I'll probably just be eating pasta for the rest of the month. So my plan is to invest in four companies today at about £500 each. Right, so let's get on with it and see where I will be putting my money this month. All right, so what should I buy? Just like last time, I'm going to base my investment decisions on the general market psychology, on the news, on what's current at the moment. And there are lots of news stories, lots of interesting things are going on at the moment. For instance, a giant ship got stuck in the Suez Canal and slowed down global trade for a while. That was a very interesting story.
A giant container ship wedged from bank to bank, blocking one of the world's most important shipping lanes. The 400-metre-long Ever Given got stuck on Tuesday morning, running aground in high winds reportedly after a power failure on board. A fleet of tugboats has been trying to refloat the megaship ever since.
But on the whole, the big topics that I think should influence the markets are very much the same as last time. So, for instance, we continued to discuss a lot the rising debts and deficits around the world. And here I just list the budget deficits for a couple of important countries. For instance, the United States is going to spend about $3.8 trillion more than it has in revenues. That's a deficit of about 18%. In China, it's 11%, Germany 8%, Japan 14%, France 10%. Here in the UK, which is where I am, it's about 16%, Italy 13%, and Canada even 20%. So these are huge numbers, staggering numbers. The debt and the deficit is enormous and could be a problem. Of course, it's all caused by the pandemic and by the need to sort of get out of it and stimulate the economy. So no sooner had the ink dried on this COVID relief bill that Joe Biden announced a new infrastructure package, and that was a big news item this week.
It's a once-in-a-generation investment in America, unlike anything we've seen or done since we built the interstate highway system and the space race decades ago. In fact, it's the largest American jobs investment since World War II.
So the idea is if everybody now spends a lot of money on infrastructure, on streets and bridges, on internet and on renewable energies and electric vehicles and all that sort of stuff, there should be a lot of potential for investors to find companies that would profit from all this spending. And so that's my first idea for this week. I want to find a company that is going to profit from all this infrastructure spending that we can expect, not just in the US, but around the world. Okay, so the way I want to play the infrastructure story is not with a business in the West, but in China, namely China Resources Cement. This is their logo, and they do pretty much what the name says. They sell cement. Here's a short description from Wikipedia, which reads: China Resources Cement Holdings Limited, parented by China Resources, so they're actually part of a much larger company, China Resources, is a leading cement and concrete producer in southern China. It is the largest NSP clinker and cement producer in southern China by production capacity and the second largest concrete producer in China by sales volume. Recently, the company hasn't been doing very well. It hit an all-time record high in 2020 and then has dropped, and it is now down about 10% year to date. So there is a risk that I might be buying a falling knife, but I also think there's a good chance that this is more or less the bottom and that now the stock price is going to go back up again. And over the long term, as you can see in this 5-year chart here, this company does tend to move up gradually, slowly over time. Of course, there's no guarantee that this is going to continue, but at least it makes it more likely. Here are a couple of metrics I found. So as of today, the price for this stock is $8 HK.69, so it's traded at the Hong Kong Stock Exchange, and they have very decent earnings of about $1.28 per share. So if you divide the first number by the second number, you get the price earnings ratio here about 6.8. So this number alone doesn't tell you very much. You would probably have to compare different companies in the same sector and then pick the one with the lowest PE. But at least it shows you there's nothing crazy going on, nothing unusual. 6.8 seems relatively low. But what's really cool about this company is the juicy dividend yield of more than 7%. So that's very high. So even if the stock doesn't go up much higher, then I can just hold it and collect a dividend instead. I'm also interested in debt levels, and here it's about 10% debt to asset ratio, which is all right. So my bullish, optimistic outlook for this company would be that in the medium term, say in the next 3 months, by July 7th, the price could go back up to its high to about $12.50, and that would be a huge increase of about 40%, which is very nice. And again, the reason would be that China now stimulates the economy. They want to construct new buildings, bridges, tunnels, streets, and so they're going to need a lot of cement for that. Of course, there are also risks. Most importantly, cement prices could drop or their input costs could go up. And in this case, they would earn a lot less, and then they would probably have to cut their high dividend. And since the dividend is very much baked into this stock, that would certainly mean that the stock price would have to come down. But on the whole, I think those risks are quite low and manageable. And I think this is quite a safe company, and that's why I'm interested in buying it, and that's what I will do now. Okay, so here I am back on my trading account overview page, and as you can see, I have £2,000 to play around with this month, which is very nice. Okay, so here it is. I found it, China Resources Cement, and I want to buy some shares. I don't actually know how much I can buy for £500. So let's convert £500 to Hong Kong dollars, which is 4,346. So if my calculation is correct, I can buy, say, 615 shares of this company. Let's put in a limit. Okay, so to buy something in Hong Kong, my commission is actually quite high, £20. There's also a Hong Kong trading fee, a Hong Kong transaction levy, and a Hong Kong stamp duty to be paid. Okay, so this is going to cost me £528, and let's place the order. There we go, my order has been confirmed, and it will probably be executed as soon as the stock market opens in Hong Kong. The second company I want to invest in also has to do with infrastructure spending, and specifically I want to buy a company that has to do with renewable energy. I happen to think that climate change is the single biggest issue of our time, probably the greatest challenge that humanity has ever faced. And yeah, I really hope that we're going to get our act together and do something about these emissions. And so renewable energy will play a big role. And indeed, recently, in the last 10 years perhaps, this has become a lot more important of an issue in politics. And it's also part of the new infrastructure plan in the US. So the US actually doesn't have a lot of offshore wind at the moment, for instance, but now they're going to catch up and build a lot more of that. And a couple of projects have already been announced. Actually, here in the UK, we are still the world's largest producer of offshore wind energy, which I think is really cool. And recently there was an auction for new plots of land in the North Sea, and you'd think you get some couple, of interesting companies there, but surprisingly, the companies that bid for the land were actually things like BP and Total and a Norwegian energy company. So a lot of the traditional fossil fuel companies are slowly moving towards the renewable space, which is good, of course, but it also means there's a lot of competition in the sector. And also Europe has announced this European Green Deal, where once the pandemic is over, they want to invest a lot in renewable energy, which again, I think is good, but it's also a difficult trade. So I looked into this a little bit, and it's actually really interesting. Here, I just looked at a couple of wind energy companies. The first two, Eversource or Dominion Energy, are in the US, and they actually pay a dividend to 3%, which isn't so bad. And they have at least some earnings, so they have a PE ratio. Whereas the next three companies, Siemens Gamesa, Vestas Wind Systems, and Nordex, they're all in Europe, and they don't even have a profit in 2020, so they don't have a PE ratio. They also don't really pay a dividend, and I think they have very high debt levels. Nevertheless, those companies are on fire. So here, for instance, I show the chart for Siemens Gamesa, who also just recently sold equipment to one of the first offshore wind energy parks in the US, which is great. And it's up by more than 100% over the last year, which is pretty astonishing, given that they don't really pay a dividend or don't really have earnings. So I suppose people hope that these companies are going to grow more. But right now, I would not really feel comfortable to invest in these companies just because they're so high. Now, maybe they're going to go even higher. Maybe this growth is going to continue. I will watch it, I will monitor it. But at the moment, I don't really want to buy any of those 5 companies. But when I looked a bit further, I found one that I think I like. So what I will do is I will buy a wind company or an energy company called Iberdrola. Iberdrola is in Spain, and this is their logo, kind of nice. And here is their profile. So it says, Iberdrola is one of the largest utilities in the world, with electric utility operations in nearly 40 countries. The company has a 53 gigawatt portfolio of hydro, wind, natural gas, coal, and nuclear power plants. It is the largest owner of wind farms in the world. That's interesting, I didn't know that. Representing 1/3 of its portfolio, so hopefully that will grow in the future. Although the company has recently developed or acquired distribution and power generation assets in other geographic areas, Spain is still home to around 50% of its power generation capacity. Iberdrola also owns and operates electricity and distribution networks in Spain, the UK, Brazil, and the US. And here is the chart over the last 5 years. It's also very high, so it's gone up a lot over the last year, but not as much, not as frothy, not as bubbly as some of the other companies. I also like the metrics much better. The current share price is €11.24 with an income of 38 cents per share, which gives you a price earnings ratio of 29.6. Also seems kind of high, but at least they have a PE. I mean, lots of the other companies are not making any money at all. Also a very nice dividend, I think 3.5%. That's pretty decent. And relatively low levels of debt. What I did here is just I took all the liabilities and divided it by all the assets and got 35%. So it's a bit inflated perhaps, but still I think their debt levels are a lot better than those of many other wind energy companies. So I like this. I like it for moral reasons. I think I'm doing the right thing by investing in a company like this rather than a fossil fuel company, which I don't want to do. But I don't really have as optimistic a story for this company. I just can't see this company all of a sudden jumping to the moon. So my outlook for this company here is that this is a hold. I need to keep it for a long time. I would probably keep it for 2 years. And in the meantime, I hope that the world will move towards renewable energy fast, build all kinds of wind farms and solar farms. And then perhaps within 2 years, the stock could go up to maybe €16, which would be an increase of 40%. So I will check again in 2 years, April 7th, 2023, and see what the stock has done. And so I want to keep this for a relatively long time. And now I will buy it. Well, I keep getting this error. Sorry, we are currently unable to process this request. Try again in a few minutes. It's been more than a few minutes. So here's what I'm going to do. I will put this on my watch list and try to buy the company tomorrow. Okay, so I added Iberdrola to my watch list. I will try to buy it tomorrow. And if that doesn't work, I will contact Interactive Investor and see what's going on. I also added 2 other wind companies to my watch list, Nordex and Siemens Gamesa. And so I will watch them and see how these companies develop. All right, moving on to trade number 3, and that trade has to do with the 2 topics that, just like last time, were discussed in the news more than anything else, and that is inflation and interest rates. Everybody is talking about this. It's hugely important. It's always in the background. Every story in some way or other relates to those 2 metrics. And inflation, people say, is generally good for stocks, especially commodity stocks, but higher interest rates are bad for stocks. And if interest rates go much higher, then that could actually cause a crash in the stock market. So there's a bit of a tug of war going on, and people are not entirely sure how things are going to develop. But the consensus seems to be that in the short term, inflation is going to rise, and then in a year or in 1.5 years, it's going to come down again.
I think there's a growing consensus that the inflationary push that we're going to see over the next few weeks and maybe even months will be transitory. It's 2022 or even early 22 or even later and into 2023. You're going to see these things really tail off.
This is going to spark a lot of inflation, or are you relatively relaxed about that?
I guess I have been relatively relaxed.
So that means that at least in the short term, inflation expectations are going to rise. And that is the story, that is the idea that I want to invest in. So the stock I selected for this story is Rio Tinto. Rio Tinto is huge, very, very big, very important company. Here's a short description. Rio Tinto Group is an Anglo-Australian multinational and the world's 2nd largest metal and mining corporation behind BHP, producing iron ore, copper, diamonds, gold, and uranium. Copper is also very important for electric vehicles, so that ties in nicely with the last story of infrastructure spending. Here is a chart of the company. It's very near its all-time record highs, although it has come down a bit recently. But I think it still has a lot of room to run because of higher inflation expectations. Here are a couple of metrics. So as of today, the stock costs £57.43, and last year they earned exactly £6 per share, which gives you a price to earnings ratio of 9.6, which I think is low enough. I think that's acceptable. Also a very nice dividend yield, 5.4%. So if the stock doesn't go up, once again, I can just hold it and collect the dividend instead. And also their debt levels are very low, just 11%. That's what I got when I divided all their liabilities by their assets. So my hope is that inflation expectations will push this stock higher in the short term. So say by July 7th, I could see a stock price of £70 for this stock, which would be a nice increase of 20%. There you have it. Let's buy this company. Okay, so here it is, Rio Tinto. It's actually up 2% today. Should have bought it yesterday, but that's life. And I think I can afford to buy 9 shares. Okay, so this is going to cost me £527, including an £8 commission. That all looks good. Let's place this order. Here we go. It's done. Order confirmed. Finally, trade number 4. And to explain my reasoning for that trade, I want to introduce another concept that's missing in my diagram at the moment, but that people talk about all the time as well, and that is central banks, especially the Fed. They're super important because they very much influence and determine what the markets are doing. So in a way, they enable all the high debts and deficits by providing debt instruments and quantitative easing and buying up treasuries. They are also very much worried about inflation or watch inflation. And so if they say inflation goes up or down, that influences inflation expectations very much. And of course, they try to control interest rates. So they would like to keep low interest rates and if they can, higher inflation, as far as I can see. But the fact of the matter is they provide a lot of money, a lot of cheap money, a lot of liquidity, and that has all kinds of consequences. So for one, we just keep going higher and higher and higher in the markets. We make new record highs all the time.
A new high in the S&P, new high in the transports, new high in the industrials, and many sectors of the S&P also at new highs. Just take a look at some of the ones that are moving. But REITs, new highs, communication services, industrials at a new high, materials at a new high, even financials. Bank stocks, not quite a new high, but financials as a sector have popped to a new high as well.
And so that then causes people to take a lot of risk. I mean, you can see this just by the fact that I am participating in the market. I should not invest in the stock market. I should just have a savings account and then let professional people invest in it. But since the market just keeps going up and up and up, I feel like I'm left out, so I want to participate. And so you can see all this crazy risk. And one of the biggest stories over the last few weeks was Archegos, which is a hedge fund, and they bought, I think, just a small number of companies and bid them up on leverage. They got leverage accounts from all kinds of banks. Then those stocks fell, they got margin calls, they couldn't pay it back, and the whole thing blew up, and losses billions. I think Credit Suisse has $5 billion in losses just because of this one thing. So it's a sign, it's a symptom of all the risk, of all the excesses that people are taking.
Bill Hwang flew a little too close to the sun. By taking on an insatiable amount of risk, he grew his Archegos Capital Management into an investing whale. But when several positions turned against him, it didn't take much to tip his firm into turmoil, causing tens of billions of dollars in forced selling. Now, the risk levels he ran defied logic. I spoke with several hedge fund managers who said they could not fathom that type of tolerance.
So in a lot of ways, it was like he took Bitcoin and leveraged it 5 to 6 times. I mean, that's the definition of insanity.
So what I want to do is find a way to participate in this craziness, in all the froth, in all the risk. That's sort of the point of all of this. So I don't just want to play it super safe, but I also want to take some risk sometimes. And so one of the hottest things that are going on right now is NFTs. Non-fungible tokens, and it's basically part of the crypto story where you can have a right to a piece of art in digital form on a ledger. And I think it's all really strange and weird, and I don't think it's really worth very much, but it's the latest craze. Everybody's talking about it.
The world knows him as Meta Koban. He is the mysterious crypto investor who paid that $69 million for an NFT. Why would anyone pay $69 million for a JPEG and a hyperlink?
Sure. I think this is a significant piece in art history.
And so I was looking around what I could invest in that has something to do with NFTs, but aren't completely crazy. And I think a good candidate I found is called Funko. What's Funko? Funko is a US-based pop culture consumer products company. It says here in this profile, it creates whimsical, fun, and different products which enable the customer to express their affinity for their favorite through movie, TV show, video game, musician, or sports team. The company holds licenses and the rights to create tens of thousands of characters, including Game of Thrones, Walking Dead, Disney, Marvel, Harry Potter, Fallout, and others. So here are a couple of their pop figures. They're very popular, so that's the kind of stuff they sell. So that's just perfect for the craziness that's going on at the moment. And you can see that in their stock. They're way up. They're up, I think, 7 times from their low in 2020 and are now trading at $23. Today alone, they were up 5.9%, and I just checked in the after hours, they're up another percent. And why is that? It's because they're planning on putting some of their stuff on an NFT. So here are a couple of news stories. For fun and profit, piggyback on the NFT hype with Funko. And also, the Reddit crowd now has discovered this stock. They're the people who bid up GameStop a few months ago to insane heights. Was a huge story, and now they've moved on to new areas, and Funko is one of the companies that they're trying to bid to the moon. So I'm not even looking for fundamental data with this one. I think the PE ratio is ridiculous, something like 200 now. They don't have a dividend. They do have some earnings. At least they're a legitimate company. At least they produce something. But clearly, this is going crazy. And my idea is, yeah, okay, you know what? I'm trying to participate in this. I don't believe in it. I think it's crazy. I think it's stupid. I don't think this NFT stuff is really worth anywhere near as much, but I want to participate. I don't really have a clear outlook for this. I mean, it could go to $100. Why couldn't it? I mean, crazier things have happened and are happening right now. So yeah, this is my risk play. This is the money that I'm willing to lose completely, but I just want to do it so I feel alive, like I'm taking a risk, like I'm actually playing. At least I have a chance to make crazy money here. Okay, so yeah, I'm willing to take this insane risk and invest £500 into Funko, the crazy company. Here we are, Funko, at a price of $23. I should be able to afford 30 shares in this company. So I need to fill in a special form, W8BIN. All right, so I submitted this W8BIN form, which is required to buy stocks in the US. It says it should be enabled within 24 hours, but it means I can't buy this company right now, but I will probably just do it tomorrow. Okay, so that's basically all for today. I wanted to buy 4 companies today, and I bought China Resources Cement because of this increase in infrastructure spending that everybody's talking about. I also wanted to buy a company that sells renewable energies, and I decided on Iberdrola. Unfortunately, I couldn't actually make the trade. There was an error, so I will try to buy the company tomorrow. Then I bought Rio Tinto, a metals and commodity company, because of rising inflation expectations. And lastly, I wanted to buy Funko because of this NFT craze that's going on at the moment, and to buy something risky. I couldn't make that trade either because I had to fill in a special form that allows me to deal in US securities first. But as soon as this is settled, I will try to buy Funko as well. So I bought quite a lot of companies, 4, because I think it's important to diversify early. It's very risky if you only have a small number of stocks, and if you put your eggs in different baskets, that reduces risk a little bit. But yeah, I'm quite happy with the portfolio I'm constructing. I think it's interesting, and I'm looking forward to see how this is going to pan out over the course of this year. Next time, I want to think more about the relationship between interest rates and inflation and central banks. It's very confusing to me, but very important. And I should also have quite a lot of money to invest again, as I'm closing down my Swiss bank account, and I might get a tax refund. And also, when you leave Switzerland, you might get some of your pension money back. So that should be fun, that should be great. And that's what I'll be doing in my next vlog.